In this video, we will answer the two questions home buyers are constantly asking. Why is it hard to find a house, and when will this bubble end? Hey guys, if we haven't met yet, my name is Mac Rogers. I'm a real estate broker here in the East Bay of the San Francisco Bay Area. Welcome to the channel. Two questions many home buyers are constantly asking are, why is it so hard to find a house, and when will this bubble end? We're in the ultimate seller's market, which means real estate is ultra competitive for buyers right now. The National Association of Realtors notes that homes are getting on average 4.8 offers per sale. In my local market, that number is more than double. Offers that are getting accepted are routinely 15% or more higher with no contingencies whatsoever. And every month, it keeps going higher, and some say crazier. Why? It's because there are so few homes for sale. The most recent Standard Poors CoreLogic Case-Shiller Home Price Index report showed a 12% increase in Feb. That's on top of 11.2 in January. That's 9 consecutive months of increasing prices. The 10-city composite annual increase came in at 11.7%, up from 10.9 in the previous month. The 20-city composite posted 11.9 year-over-year gain, up from 11.1 in the previous month. The 5 top cities that reported the highest year-over-year home gains are: Phoenix led the way, up 17.4% from 2020. San Diego 17%, Seattle 15.4%, Boston 13.7%, and Tampa 12.7%. The narrative behind this is still that COVID-19 is really pushing home buyers from apartment living to suburban living. And also, according to Craig Lazara of the Standard Poors Dow Jones Index, it also represents buyers who accelerated purchases that would have happened anyway over the next several years. In other words, home buyers thinking of buying in the future are also in the market right now. Now, I don't know how they track this last part, but I can certainly tell you from my own experience that I do get a sense of urgency from the clients and other home buyers that I'm helping. So that statement seems to be fairly accurate. It's no surprise that every region of the country logged double-digit gains in home prices. The biggest gainers are the West, up 13%, and the Southwest, up 12.9%. Another agency that tracks home prices is the Federal Housing Finance Agency. Their home price index also reported a 0.9 increase. For the 9 census divisions, seasonally adjusted monthly house price changes from January to Feb of this year range from 0.3% increase in the Mid-Atlantic Division to 1.6% increase in the Mountain Division. The 12-month changes range from 10.5 increase in the West-North Central Division to 15.4 increase in the Mountain Division. A lot of this activity could also be driven by our historically low mortgage rates. There is a sense of FOMO, or fear of missing out, that's adding fuel to the fire, if you will. At the beginning of the year, we saw mortgage rates starts to climb, and it went up to as high as 3.5%. And that kind of slowed down the mortgage applications. But mortgage rates dropped again below 3% last week for the first time in 2 months. It's down 7 basis points to 2.97%, according to Freddie Mac's primary mortgage market survey. Low rates combined with low inventory are driving these crazy bidding wars. As the US economy is starting to open up and our economic recovery is gathering more steam, there is an influx or a wave of new buyers that are seeking to get into the market. And I expect that with the CDC guidelines being lifted and people are more free to move around without restrictions, we will see even higher competition this summer and possibly for 2 more or 3 more years, because there is not enough homes to sell in the market. This will make what we are experiencing right now more of a normal thing. What I mean by this is all these bidding wars and escalating home prices will continue. Now, a bit of a side note here. Here in the Bay Area where I'm at, this constant bidding wars and lack of inventory that the rest of the country is experiencing has been the story ever since I started my real estate career back in 2001. Even the time of the foreclosure crisis, there were instances of people still bidding up houses. It's not new for us over here, but what is new is the intensity. This upward pressure in price doesn't seem to be slowing down. And you constantly hear people talk about a bubble. I mean, I get tired of people that keep telling me that they think it was in 2021, now 2022. I mean, when will it burst? But when I ask these people, what data are you looking at to come to the conclusion that we are headed that way? They will usually cite the forbearance situation. I made several videos on that already, so we won't go into that. But basically, that won't happen because the government is hell-bent on not letting 2008 repeat itself. The second thing that they will say is our economy. Now, I know there are people hurting out there, particularly in the service, tourism, and travel industry. That's real. I'm not minimizing anyone that's going through that. No one, certainly not me, wants to see that. But here's the thing. All economic forecasts points to growth. In fact, in Q3 of last year, the economy recovered, expanding by 33.1%. Some are saying that we will be seeing a period of supercharged growth that should remain all the way to 2023, which many are calling pre-pandemic era. As one CEO puts it, this economy isn't coming back. It's back. The first signs of the economic blast-off showed up in March's better than expected increase of 916,000 jobs. For home prices to really ease up, we don't need this Biden plan of giving $25,000 to first-time homebuyers and giving tax credits to first-time homebuyers. That won't help at all. It's like me telling my dad, "Dad, I want to buy a Ferrari," and him responding, "Son, how much is it?" And I'm like, "Dad, if I can find one, it's probably around $300,000 or more." And he's like, "Here's $3,000 and I'll even give you $100 as a gas card to put gas on your Ferrari if you can find one." I mean, it's nuts. Politicians are clueless, but that's not the point of this video. The point is we need real solutions. And it's true whether it's a Republican or a Democratic president. So don't get all bent out of shape with that statement. And what's the real solution to this housing crisis or housing affordability issue? Now let me go off on another quick tangent here. Is it really an issue? Let's take for example my analogy here. I want a Ferrari. I can't afford a Ferrari. Is that a problem? I have a car. In fact, I have several cars to choose from. Even if I didn't, I can take Uber, I can take public transportation. And this is the narrative that I hate that's being pushed on us. That is, everybody needs to buy a house or everybody has to buy one because it's the American thing to do. In fact, the new narrative also is that you can't build wealth or equity if you don't buy a house. They don't want anyone left behind with all this equity thing. Now, don't get me wrong. It's a great thing to own your own home. I have always wanted one. Being a realtor, I want you, if you want to buy a house, to be able to buy a house and of course, use me as your realtor. My point is the government is putting out solutions that are not aligned or are not helping at all. In fact, in high-cost areas such as mine, this is like a slap in the face, not helping. Maybe somewhere where the homes are priced $300,000 or less, that could help. What the situation calls for is more inventory. This lack of inventory in the housing market isn't new, but it continues to be a major hurdle. As Daniel Hale, chief economist at Realtor.com explained, the housing market is still relatively undersupplied and buyers can't buy what's not for sale. Relative to what we saw in 2017 to 2019, March 2021 was still roughly 117,000 new listings lower, adding to the pre-existing early year gap of more than 200,000 fresh new listings that would have typically have come to the market in January or Feb. Despite this week's gain from a year ago, we're 19% below the new seller activity that we saw in the same time the week of 2019. While many homeowners paused their plans to sell during the height of the pandemic, this isn't the main cause of today's huge gap between supply and demand. The decline, or actually long-term decline, can be attributed to the decrease of new construction of single-family homes. Let's take a look at this graph. When you consider the number of homes being built in the US by decade, there is a serious lack of new construction. The number of newly built homes is disproportionately lower than the rate of household formation, which, according to the US Census Bureau, has continued to increase. Sam Cater, president and chief economist at Freddie Mac, has this to say. Even before the COVID-19 pandemic and current recession, the housing market was facing a substantial supply shortage, and that deficit has grown. In 2018, we estimated that there was a housing supply shortage of approximately 2.5 million units, meaning that the US economy was about 2.5 million units below what was needed to match long-term demand. Using the same methodology, we estimate that the housing shortage increased to 3.8 million units by the end of 2020. A continued increase in housing shortage is extremely unusual. Typically, in a recession, housing demand declines and supply rises, causing inventory to rise above long-term trend. To catch up to current demand, Freddie Mac estimates we need to build almost 4 million homes. Now, the good news is builders are working hard to get us there. The U.S. Census Bureau also states privately owned housing units authorized by building permits in March were at a seasonally adjusted annual rate of 1,766,000. This is 2.7% above the revised February rate of 1,720,000. Privately owned housing starts in March were at a seasonally adjusted annual rate of 1,739,000. This is 19.4% above the revised February estimate of 1,457,000. This is a good sign. We are seeing lots of construction activity. In fact, the March figure of 1.7 million housing starts is the highest in 14 years. Both single-family units and multi-family units ramped up. After 13 years of underproduction, which is the chief cause for today's inventory shortage. However, this construction boom needs to last for at least 3 years to make up for the shortfall. If this construction boom continues, we should see trade-up buyers purchase newly constructed homes or wanting to buy newly constructed homes, and guess what happens? Their homes go on the market available for sale. This still does not solve the government's agenda of cheaper housing. Remember, affordability is different from cheap housing. And I've said it before here in this channel, we don't have an affordability issue. Because if that was the case, no one would be buying. Now, am I saying that we're never gonna go down? Of course not. But look at the data, look at the numbers, look what's going on. Because in the end, that's the only thing that we can go by. So it's not like people are just going out there and crazy saying, hey, I wanna pay 200,000 over asking for that house. No, it's not. There's a genuine demand from people that can and are willing to buy and pay for these prices. So the bottom line, why is it hard to find a house? There's no inventory. When will the bubble burst? It's not a bubble. Hey, if you're planning to buy this year or sell this year, the key to success will be patience and a great realtor. Let's connect today to talk more about what's happening in our area. I'll see you on the next video.